And Starbucks are also imminent. And then the biggie, Apple at the bottom of the hour. That report coming as new questions swirl around the world's most valuable company. Has a supply problem turned into a demand issue? We shall see. It's hard to overstate the importance of all of this as the Fed-fueled rally, especially as you've seen in tech, rolls on again today. Our reporters are standing by to break in with the results. We'll show you the stock moves as all of this goes down. Our panel at the ready, too. Stephanie Link, Hightower's chief investment strategist. Sarat Sethi of Douglas C. Lane. Liz Young is SoFi's chief market strategist. And Malcolm Ethridge of CIC Wealth. Stephanie and Sarat are CNBC contributors. By the way, the results are dropping as we speak. I see that Amazon's out. Reporters are going through it. And Sarat, so we've got Qualcomm dropping. You got Amazon, which is out. We got Google coming up, and all the others, in Apple again, bottom of the hour. Malcolm, you are in Amazon. What were you most especially keen on today?
Yeah, I was actually interested to hear if Andy Jassy announced anything related to additional cuts. I think shareholders like myself have already heard all of the bad news you expect to hear related to this name, and so they really didn't have anywhere to go except sideways to up. And I think that's probably what we're looking at right now with the results that Deirdre just reported. We're basically getting some of what we knew was coming, which is that the cuts seem to be working. The e-commerce business is picking up slightly, but it's still got a ways to recover from all the overbuilding that happened. And hang in there with us because AWS is still the most important thing related to this enterprise. And we have a feeling that that's going to steady a little bit going into Q2. That's basically what I'm gathering from the early read. And that's essentially what I was hoping to hear as a shareholder who's looking at a company who already got whacked 50% last year.
Malcolm, I'm looking at Alphabet and I'm looking at Amazon, and I'm not naive to the fact that the stocks are lower, but I can't help but wonder whether this is a Microsoft moment where there's initial disappointment. None of this can be a great shock to anybody, okay? Most of these companies have prepared us as the investor for what's here, right? The macro's a little weaker. Revenue growth is not as strong as it was. But are we going to be talking about these stocks brushing this off in the days ahead and doing what a Microsoft did? Microsoft, I think, today is higher than it was after its earnings day.
Scott, I'm actually a little bit concerned to hear Liz say that she's questioning her thesis now, because I was actually looking at this and saying, the market seemed to be retreating back to what felt good when the bull was raging back in 2020. And that feels like a bit of a trap to me. So she was one of the more cautious folks on the panel talking about the importance of sticking to the technicals in the numbers here. And if I'm just looking at the stocks that are leading the way and the fact that the tech-heavy NASDAQ is up, 9-10% or so far this year, I really can't tell if this is investors going back to what made them feel good when things were a lot more speculative, or if they really do believe in names like Tesla and Nvidia and Netflix for the long term. Those were all the biggest losers in 2022, basically left for dead. But so far, they're the biggest gainers for 2023. And so that is what gives me pause here in this moment and says, maybe this sugar high isn't quite what we think it is. And I start to get a little bit concerned.
I mean, maybe some of the candy's good that's giving you the sugar high, and some of it is not. I mean, you really walk me right up to what Brad Gerstner told me today on the halftime report about this very issue. The kinds of stocks, these speculative tech stocks that have really ripped to start the year. Is some of it justified? Maybe. Is all of it? No way. Listen. Malcolm, what do you think about what Dan has to say about what this company delivered? He makes good points, right? Some of the fear was that even if there is a demand issue because of supply concerns, et cetera, that the March quarter is going to be, they'll pull it all forward to the March quarter, so don't be too upset about it now.
Yeah, I think from a even bigger perspective with Apple, we may be setting up to find out just how impactful they still are with respect to the broader market, right? If Apple releases lackluster results again next quarter, right? I'm answering the question sort of that you asked me earlier about Microsoft, but applying it to Apple. If their shares sell off over the next couple quarters, but the rest of the market continues to rally, that could be indicative of things to come throughout the remainder of the year, like you're talking about. So it could matter in the short term, right, how much they're missing those iPhone sales units. I don't think there's really a substitute for the iPhone. I think, either the recession is hitting you, you're pinching your pennies, and the replacement cycle for the iPhone might be a little bit longer than it has been in previous years because people don't have the cash to throw at another device that does the exact same thing. But I don't think that there's a substitute for the iPhone. So you're not trading down to something else necessarily. So I think we're finding out right now over the next 6 months, let's call it, or through the remainder of this year, if Apple is going to continue to be as impactful for the broader market, the S&P specifically, or if we're rotating to someone else becoming the more dominant leader.